Good morning, everyone. This is Marshall Gittler bringing you the morning comment for March 31st. Well, the dollar continued to strengthen on Monday. End month and end quarter demand pushed the currency higher. Much of the demand was apparently due to such position squaring rather than any fresh risk taking. Today being the last day of the month and quarter, we could see continued demand. The question then is, will it continue on Wednesday when April begins? I think so. In contrast to what we've been seeing over the past several weeks, the recent U.S. economic indicators have generally been good, suggesting perhaps U.S. indicators are starting to improve. The market's likely to start looking forward to another strong U.S. payrolls figure this Friday, which, coming out on a thin holiday day, may have greater than usual impact on the dollar. Now, the Australian dollar was the big loser overnight as investors started thinking about the possibility of Aussie-Kiwi hitting parity. Australia's domestic data released Monday wasn't that bad. However, the external environment for the country is deteriorating. The price of iron ore has fallen to its lowest level since May of 2009. Do you need a reminder of just how bad the global economy was in May 2009? China will release its official March manufacturing PMI on Wednesday, and the market expects another reading below 50, which would be the third in a row. With oil prices down as well, the outlook for commodity producers is not that great right now. The RBA meets on April 7th, and the market's now pricing in a 79% likelihood of a cut in rates at the meeting, up from 68% a week ago. Aussie seems to be the number one currency in the firing line. Today's highlights: during the European day, the Eurozone's flash CPI for March and unemployment rate for February are coming out. The turn of the German inflation rate to positive on Monday increased the likelihood that the bloc's deflation could moderate somewhat. This could prove euro supportive. However, following the introduction of the quantitative easing program by the ECB, the impact of the CPI on the euro isn't as great as it used to be, so the reaction in the markets could be limited. German unemployment for March is also coming out. In the U.S., we get the S&P Case-Shiller House Price Index for January, which is expected to have decelerated from December, but still show house prices rising, including, I hope, my house in Phoenix, Arizona. Chicago Purchasing Managers Index and the Conference Board Consumer Confidence Index, both for March, are also to be released. These are likely to keep confidence up and the dollar supported. From Canada, the monthly GDP for January is expected to contract a bit, a turnaround from the previous month. This was expected to cause the annual growth rate to decelerate and keep the Canadian dollar under selling pressure. We have 4 Fed speakers on Tuesday's agenda, plus ECB Supervisory Board Chair Danielle Noy testifies before the European Parliament Economic and Monetary Affairs Committee. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.